Welcome, Mindsetters, to another week. Yes, this week has been like it just flew past, and here we are back again at Mindset Studios. You're here with me, Megan, and Martin, Eminem, right here for you. Today we're doing accounting grade 12s. Yes. Do you want to know what we're doing today? Martin, tell us what we're doing today.
Hi, Megan, and hello, Mindsetters. What we're doing today is the exciting topic of non-current assets.
Ooh. I'm not going to ask you to explain because the lesson will just have no point then. So I'm going to send you to the board and then I'm going to tell the Mindsetters what they need to know. Okay.
Sure thing.
Okay. So Mindsetters, I'm going to tell you all you need to know, all that's happening here. First of all, Matrix, I want to tell you about something quite exciting and different. From the 20th till the 22nd of June, there's a career conference at the Santon Convention Center. And all you have to do is enter at careerindaba.co.za. Okay, so that's where you enter for all the things that you need to know about the careers. If you don't know what you want to do yet, you're a little bit unsure, you're looking for direction, I suggest you go. I really do. But other than that, I know you want to be sitting there in front of your TV with all your notes. And where can you get the notes? I know you're asking me now. You can get the notes at mindset.co.za/learn extra. And if you want to talk to Martin and I on the page, because we'll be here for the whole hour, it's facebook.com/learn extra and on Twitter @learn extra. So I think I've done a lot of talking, so I'm going to hand over to Martin with non-current assets.
Thank you very much, Megan, and welcome, Mindsetters, to today's lesson. What we're going to be discussing is something that you would have remembered from your grade 11 accounting. And it's been with us for quite a long time, but it is something that's going to be very, very important at the end of your matric syllabus. And that is the topic on non-current assets. Now, what we're going to be covering in today's lesson, first of all, we're going to look at a definition for fixed assets. Think about it in the meantime before I get there. See if you can work out what fixed assets are. Secondly, we're going to look at calculating depreciation. And with this, you have to remember that there are two ways. More about that in a few minutes. Then we're going to discuss something that you also did in grade 11, which is the disposal of fixed assets. There'll be some recapping because it's part of the grade 12 syllabus as well. And then finally, we're going to look at another important aspect, which involves your managing and your controlling of fixed assets. So let's get to our first topic. What we need to know if we're thinking about our definition of fixed assets. We really have got two types of assets, and they are non-current and current assets. Non-current assets are typically assets that we want to keep in our business for a long period of time, something that we're going to use for a long period of time. So if you have a look at Megan with her laptop over there, Megan, are you going to use that laptop just for one day?
No.
Definitely not. We're going to use that laptop over and over and over again.
Yes.
So that would form something like a non-current asset. It's something that we expect to keep for at least a year in the business. However, if you were to get some trading stock in your business, are you going to keep that trading stock for an entire year before you sell it?
No.
Definitely not, because otherwise you'd be wasting your time. You keep the stock on the shelves and you don't make any money. So trading stock would be something that's a current asset because you want to sell it and convert it to cash within a period of time. That's usually shorter than a year. Now, we usually divide non-current assets up into two parts. They can be fixed assets and they can be financial assets. Where, Mindsetters, have you seen this before? I'll tell you where. You've seen it on the balance sheet. When you are drawing up your balance sheet, you have a section on non-current assets, and there's a part for fixed assets and there's a part for financial assets. So your fixed assets are usually divided into three different things. You have land and buildings, you have vehicles, and you have equipment. You can remember those three because land and buildings is L, V for vehicles, E for equipment, and everybody just will love accounting if they remember that. So remember, L, V, and E will give you your fixed assets. That computer that we have here, this laptop, that would count as a piece of equipment. So remember, equipment is all your machinery, it would be all your light fittings, all your furniture. Vehicles, on the other hand, would cover anything that you can drive in, such as trucks, delivery vehicles. It could also be something like a scooter or a motorbike that the business uses for delivery. And then finally, land and buildings would be a piece of land, or it would be something with a structure on it, like an office, a shop, anything that has been built. So those are our three fixed assets. And the other section of non-current assets are what we call financial assets. Financial assets are easy to remember. They are just the assets that you have that are money investments. So for instance, we could put money into the bank as a fixed deposit. Megan, if you put money in the bank for a fixed deposit, are you intending to draw it out tomorrow?
No.
Usually not. That's what we use our current accounts for. What we do with the fixed deposit is we leave it in the bank for a period of time, and the longer you leave it in, the more interest it gets. So a fixed deposit will be a type of financial asset. It will be non-current because we will try to leave it in the bank for a long period of time in order to earn interest. What you must just be careful of remembering is that some fixed assets are some fixed deposits are non-current assets. That is if we are intending to leave them in the bank for longer than a year. But let's say that that year then passes, and next month there's a fixed deposit that's going to expire. You must remember there's a little trick on the balance sheet. That fixed deposit then becomes a current asset if it has less than a year until maturity. So they are only non-current assets if they have more than a year until maturity. So make sure you understand the difference between that, because you often get an adjustment that involves that. Also, please remember that fixed assets depreciate. Depreciation is something that happens to all fixed assets. Things get old, things get used. Through wear and tear, items lose their value. So even though Megan is taking care of that computer, she's not going to be able to sell that laptop at the same price that it was bought for. Why not? Because it's got old. People have used it. There's another reason, though, why fixed assets depreciate, and this is also something that I'm sure you'll remember. Fixed assets can become obsolete. What that means is that new technology or new products that are better actually become available. In the past, people used to listen to music on records. Then there were cassettes. Then there were CDs. Now you have MP3 players that can let you listen to music. So nobody is really going to buy a cassette tape anymore. This is because old technology has been replaced by better technology. So remember that assets can also depreciate when new and better items come out to replace them. So that's some theory on fixed assets. And we'll now move to the calculation of depreciation. That is something very, very important. And mindsetters, I'm sure you've done this since grade 11, but remember to revise it before your final exam, because it can come up in many different questions. It can come up in adjustments. It can come up in your cash flow statement, and it can come up in other questions on fixed assets. So what you need to remember is that there are two methods. Our first method of calculating depreciation is the method that is on cost. So here's the formula. It might be a little bit different to the formula that you have in your textbook, because different textbooks have got different ways of explaining it. But if you're calculating depreciation on cost, all you do is you take the cost price of the asset, you multiply it by your interest rate, divide by 100. So where R over here in my formula is my interest rate, and then you multiply it by the number of months that you have kept the asset in the business for, and divide it by 12. And usually you calculate depreciation at the end of a financial year, or you will calculate it when you sell an asset. But this is just a quick recap of what you should know from grade 11. There's a second method of calculating depreciation, and that is your diminishing balance method. Your diminishing balance method is the one that's a little bit more tricky, because there's a small difference. If you look at my first example on cost, I take the cost price, multiply it by the depreciation rate, multiply it by the number of months, and divide it by 12. If I'm doing the diminishing balance method, it's slightly different. So please note this difference. Instead of using the cost price, I am going to use the carrying value. The rest of the equation stays the same. I multiply by my interest rate divided by 100. Sorry, it's the depreciation rate, because we're calculating depreciation, we're not calculating interest. And then we multiply again by the number of months and divide by 12. So you can see that the only difference between the two methods is that the one is calculated on the cost price and the other one is calculated on the carrying value. What is the carrying value? I'm sure you remember that from grade 11 accounting. So please, I'd like you to send us a message. Send us one on Facebook. Let Megan and me know how to calculate depreciation using the carrying value. What is the formula for calculating the carrying value? I'm sure you know it. Send it in to us and we'll announce the answer a little bit later. Okay, now another important key concept is the disposal of fixed assets. And this, I would say, is something that's very, very important to revise. Some people might forget to revise it because it is a grade 11 topic, but it is something that will definitely be asked to you in some way in your matric exams. So what is important about this is to learn the format of the asset disposal account. I'm not going to do this in a lot of detail. I'm just going to talk you through the various steps that you need to do, but make sure that you understand and that you know this format. So the asset disposal account over here, this is a ledger account, but I've just blown it up to look a bit bigger so that you can see what goes on either side. Remember, the first thing that you do is you put the cost price of your fixed asset. That's the cost price of the asset that you're wanting to sell. That will always go on the debit side of your asset disposal account. I'm sure you remember that from grade 11 accounting. Then what you do is on the date of the sale, you calculate the total accumulated depreciation on that vehicle or that piece of equipment that you're selling, and you record that over here on the credit side. So we've already got the cost price over here, and we've got the accumulated depreciation. At any time, what you can then do is subtract the one side from the other, and that's going to give you something which I'm going to tell you about a little bit later. It was the question that I previously asked. There's a hint for you. Now, what then happens is your third step is to fill in the credit side of the asset disposal account, and that can be done in one of at least 5 different ways. It's going to depend on how you sell the asset. I can sell my equipment or my vehicle for cash. If I sell it for cash, then the details that I'm going to write are going to be bank, because we record the cash that we receive in our bank accounts. So if you sell it for cash, the details that you write here are bank, because bank is your contra account. I don't have to sell it for cash though. I could sell it to a debtor. I could sell it on credit. If I do that, then the details are going to be debtor's control. So what we will do is we will debit debtor's control and credit the asset disposal account. This is what you would do if the vehicle or the equipment that you're selling is being sold on credit. Then we have creditor's control. This one we're going to use if we are trading the vehicle in or if we're trading the equipment in. And then finally, there are at least 2 other possibilities. There are drawings. Drawings are going to result when the owner takes the equipment or the vehicle out for personal use. And donations, this is what's going to happen if we should donate the vehicle or the equipment to charity. Now, the last step that you do, once you've filled in all the information that you have, the very last step that you do is calculate either the profit on the sale of the asset or the loss on the sale of the asset. So what you would do is you would balance this ledger account out. You all know how to balance ledger accounts. You've done it since grade 10. But instead of working out a balance brought down or a balance carried down, what you're going to do is calculate a profit or a loss on the sale. So if the balancing figure ends up on the credit side, you have made a loss on the sale of the asset. But if the balancing figure ends up on the debit side, you have made a profit. The only way you'll know that is once you've filled in all the necessary information and calculated whether you've made a profit or whether you've made a loss. So that's the asset disposal account. And I've said here, very, very important, revise your grade 11 work. Make sure you know how to complete the asset disposal account. And it's often asked not as a specific question, where the question says to you, draw up this asset disposal account. No, very often it's asked to you in the form of an adjustment. So you might get an incomplete financial statement or a pre-adjustment trial balance where you have to do some or other adjustment where the inexperienced bookkeeper forgot to calculate depreciation or didn't do something correctly. Then the examiner is not going to give you an asset disposal account to draw up. Instead, you will have to calculate those numbers in a certain way. And the easy way to do that, simply draw up your own asset disposal account somewhere on your page, get the necessary numbers, and use them to calculate whichever number you're looking for. Also, sometimes it gets asked in the section on companies, other times it gets asked as a cash flow statement question. Make sure you realize and make sure that you've worked through as many past papers as you can before tackling your final exam, because you'll see that this depreciation comes up everywhere. One more thing that I need to remind you of, very important, another component of grade 11 work that you'll need to revise, go over note 3 on the balance sheet. Note 3 is that note on the balance sheet which tells you about the fixed assets. Learn its format, know it well, so that when you come into the exam, you're able to fill in all of the numbers from top to bottom, with the cost price, the carrying value, and so forth. You know where to find this information in your textbook, you know where to find past examples. Make sure you try them and understand the format of this account. Okay, so how are we doing for time, Megan? Have we had any answers to my question yet?
I'm refreshing the page, so I think you can just carry on a little bit, and I will tell you in a minute.
Okay, so what I'd like to do now is let's go through an asset disposal question, a question that you're likely to get in an exam. You can see that this question is on asset disposal and on internal auditing. So it's a combined question. You're not likely to get just a question on fixed assets. It's often combined with other components of the syllabus. So let's have a look at the information that we've been given in this question. It says here that Saks Limited recognizes the importance of keeping their employees happy. I think it's good if you're an employee to be happy, don't you, Megan?
Yeah, you can't work if you're not happy. Why do you want to go to work then?
Exactly. So what this business is doing is they are trying to keep their employees happy, and they're trying to keep them motivated. So what they do is the following. It says, as part of their human resources maintenance strategy, they allow their sales representatives to use a company car. What does that mean if a sales representative uses a company car? What do you think, Megan?
It lowers the value of the car, first of all, but it's also, isn't it a benefit if you use a company car?
It's a massive benefit. I mean, if you think about how do people get to work? People have to take public transport very often. They are sometimes dependent on taxis. They are sometimes dependent on buses. So an employee would be very, very happy if the company provided him or her with a car that he or she can drive to work. So what they do is they use a company car when on company business. And please note, it's the sales representatives that do this. So sales representative, in case I need to refresh your memory, would be a person that drives from place to place, helping a business to sell things. So they might come, if you think maybe at your school, somebody might come and try to sell textbooks to you or try to sell learning materials to you. So they have to drive from school to try to sell these learning materials, and so obviously they need transport. This business is trying to keep its employees very happy so that they don't have to use their own transport and their own petrol. What they're really doing is giving them a car for use for business reasons. So furthermore, when this car has reached a mileage of 80,000 kilometers, this business gives them the option of buying the car that they have used at its carrying value in the company's accounting records. So let's just clarify what this means. I'm a sales representative for this country. I drive around in my daily work, and once I've covered 80,000 kilometers, my boss says to me, you've got the option of buying this car. Give me money and the car becomes yours. They're going to put the car into my name. And what's more, they're going to sell it at our carrying value.
Can I read it to you? I have some answers.
Excellent.
Simpiwe says, we calculate the carrying value by subtracting the accumulated depreciation from our cost price. That's what he says.
Exactly right. Well done, Simpiwe.
Okay.
So what we do is we take the cost price and we're going to subtract the accumulated depreciation. And that's going to give us our carrying value.
Cool.
Very well done.
I think it's time for an ad break, do you think, after that? Then we can finish the paragraph when we come back. Right? Okay. Well, mine said it's time for a break. I know counting sometimes gets into your head so quickly. Don't forget, oh my gosh, can you believe it? After Earth is playing in the ad break. So don't go anywhere. Just shake your head a little bit. And right after the break, I'll tell you all about the competition. Okay. See you afterwards. Welcome back, Mindsetters. I know you guys did watch the After Earth trailer, so let me tell you about the competition happening here at Mindset. Okay, so this is an opportunity for you and a friend to win 2 tickets. So you and a friend to win a ticket to go and watch the show, or movie, show. So all you have to do is enter, and you enter at www.learnextra.co.za/After Earth. So you enter, you put your name down, you give your details, and you could be a winner on today's show. So I'm going to announce a winner from yesterday, and that is George Malua. George Malua. I'm going to say it again. But in order to win something, you need to give a code word. And the code word for this show is consequence. So I'm going to post it on the page. So all you have to do is click, register, and you could be a winner, you and a friend. So I hope you guys got all of that. And if you have questions about it, please talk to me on Facebook, and I will answer anything that you have, any questions that you have. Okay, so Martin, I hear you have a question for us on all about this After Earth movie.
Yes, I do. Thank you very much, Megan. And for those of you that are going to win the competition, or for those of you that are going to see the movie, we know that this movie is all about being green. So what does it mean if you're green? I myself have got a green shirt on, and I like eating cucumbers, but that doesn't necessarily mean green in the sense that I want to refer you to. So what do you understand by the term green, Megan?
Environmentally friendly.
Environmentally friendly. And that's exactly what this After Earth is about, and it's something that we're trying to raise awareness for. So I'm going to, just before we get on to the other questions, look at this last question and ask you in the break to send us some answers. We've talked about this business that is trying to sell vehicles to their employees. There are many employees in the business that are sales representatives, and they're going to use company vehicles. But we also know that vehicles are bad for the environment. So the question here is, please suggest 2 possible procedures. I'm even going to write in green. Please suggest 2 possible procedures that this business could implement in order to become more green with respect to its vehicles. So really what I'm asking you to do is think about what our business, the one that we're talking about, could do in order to make sure that the vehicles are more green and that they don't pollute the air as much. So think about that, send us your suggestions, and we'll discuss them after the next break. Okay, let's go back to the paragraph that we were reading. It was quite a long one. We were talking about this business that was busy giving the employees the option to buy these cars. And it says that this strategy has been enjoyed by employees for the past 5 years. So it's been working very, very well. But the directors are concerned that in the last financial year, more vehicles than usual have been taken out or taken over by the employees. So this business has got vehicles which is trying to dispose of or get the employees to buy, and it's been working well, but right now there are some problems. And you, as experienced, outstanding accounting students, are going to have to give some advice to this business. So it says, consider the information that's been given and answer the questions that follow. It says here, carefully analyze the 3 applications received during June. So we're going to look at the information in a second, but let's first find out what the question is asking us to do. Carefully analyze the 3 applications that were received during June. We need to suggest possible irregularities. So mindset is, there's something wrong here. You are going to be detectives and try to find out what it is, try to find out what the problems are. And what's more, you have to use this to comment on the application procedure. The application procedure in this case means how these employees apply to buy the vehicles that they are entitled to buy. It says that we should highlight any possible flaws and we should suggest possible controls. You know your section on internal controls. Those are steps that we put into a business to try to stop bad or unethical behavior in our business. So you're going to have to do 2 main things in this question. You have to see what the problem is in the application procedure, number 1. And number 2, you are going to have to suggest some possible controls that could be used. And it's asking you to make specific reference to the applications that were received during June 2012. So of course we don't know enough information to answer this question yet, so let's have a look at what the information says. If we go to our information book, it tells us the following. Firstly, it tells us that representatives travel approximately 18,000 to 20,000 kilometers per year. That's a lot of distance. They drive a lot, these sales representatives. Secondly, it says that the representatives complete a standard application form when they notice that the car has reached 80,000 kilometers. So remember, they're allowed to buy the car once it's covered 80,000 kilometers, and they're going to complete a form. What then happens is that this application is read, and it is filed by the asset manager. Here's where you need to know your theory. The asset manager is the person that manages the assets. Well, that one was obvious, but it's the person that is in charge of looking after the fixed assets of the business and really dealing with all the paperwork and the purchasing and the selling and the recording of these assets. So the accompanying payment is then banked. So if you're an employee of this business, to buy the car, what you need to do is fill in the form, give money to the business, and then the car becomes yours. Quite an easy procedure, but we're going to see that there's some problems here. It also says that the employee is responsible for transferring the vehicle into their name. Think so long about this and see if you can spot anything that's wrong with this procedure. We're going to discuss it in a moment. Our next important thing, third point, says that depreciation was adjusted to 25% per annum. This is our depreciation rate. It was adjusted, in other words, it was changed. And it was adjusted to 25 per annum on cost by the accountant, Andrew Munich, as of the beginning of the previous financial year, 1st of January 2011. Before this adjustment was made, our vehicles were depreciated at 20% on the carrying value. So for some reason, we don't know what it was, this accountant decided to adjust our depreciation rate. It used to be 20%, and it's now 25%. What this means is that this business is writing off more depreciation every year. You need to think a bit about that. Is that a good or a bad thing? Has he done the right thing or not? Furthermore, it was adjusted from the on-cost basis to 20% on carrying value. So he's not only adjusted his rate, he has also adjusted the method of depreciation. So instead of using the cost method, he is now using the diminishing balance method. Now, let's have a look at the various applications. It says that the following applications were received from representatives during June 2012. First of all, here's the application form. It says the name of the employee, it's got the application date, the registration number of the vehicle, and it's got the mileage. So this car has done 82,000 kilometers. The original purchase date of the vehicle by the business was the 1st of January 2008, and here are some prices that the employee is going to use. So remember, the employee is allowed to buy the car on carrying value. We said that earlier. And for those of you that remember what carrying value is, if we want to know what the purchase price should be, we would take the cost price and subtract the accumulated depreciation, and that would give you the price at which this vehicle was sold. Now, let's look at the second one. Here is an application to purchase the vehicle by the employee, Andrew Munich. Where have we heard that name before? It was previously in the question. Do you remember that name, Megan?
Andrew.
Andrew. It was up here. Andrew Munich. Who is he? He is
Accountant.
the accountant of the business. And who did we say was allowed to purchase the vehicles? Not the accountants. Remember our question said, if we look at the original question, it was only the sales representatives. Remember here, where I drew the smiley face? It was only the sales representatives that were allowed to purchase vehicles. So there's already an irregularity here. We said that Andrew Munich is the accountant, but in fact, he's purchasing this vehicle, whereas it's only the sales representatives that need to do it. Megan, do you think that an accountant needs to travel a lot every day?
No, they just sit at their laptop and do what they need to do, or their work.
Exactly.
They don't need to travel.
Don't really need to travel. So it's quite surprising that this employee seems to be buying a vehicle for his own personal use, when number one, he is an accountant, he's not a sales representative, and number two, the job of the accountant doesn't involve traveling to see customers and to sell products. So I'm already starting to see that something seems to be a little bit fishy. It also says here that the application date was the 28th of June 2012, but his mileage was 81,500 kilometers. Now, what's important to see is this. The original purchase date of the vehicle was the 1st of January 2011. So this accountant has had the vehicle only since the 1st of January 2011. So he's had it for about a year and 6 months, because he's had it from the 1st of January up to the 28th of June 2012. And in that time, he has driven 81,500 kilometers. I think that's a lot to drive in a year, especially if you're an accountant and your job really involves working in an office. Remember also that we were told in the information, sorry, it's on this top of this information page, it says here that representatives travel approximately, here it is, I'll circle it in pink, 18,000 to 20,000 kilometers per year. So if you're traveling 20,000 kilometers per year, how long will it take you to travel 80,000 kilometers? That's quite easy. It will just be 4 years because you'll travel 20, 40, 60, 80. So it should actually take you 4 years to travel that distance. In the meantime, this accountant has traveled 81,500 kilometers in a little more than a year and 6 months. Then another very important thing is look at this date. This date is the 1st of January 2011. I know that the 1st of January 2011 is just a year ago in the time frame of this question. And another important thing is if you look at the top here, you will see that we've seen that date before as well. Here it is, the 1st of January 2011. What happened on that day? If you read the information, it will tell you that depreciation was adjusted to 25%. So this accountant adjusted the depreciation on the 1st of January 2011, and that's quite strange because that's the same day when he bought that car. So he's increased the depreciation rate, and it looks like he's increased it so that his car is going to depreciate faster so that he can buy it at a lower carrying value. So from these applications, we've already seen a couple of irregularities. Let's look at this third one here. This third one seems to be okay because her application date was on the 30th of June 2012, and she's had the vehicle for 4 years. We already calculated that it should take us 4 years if we travel 20,000 kilometers a year. It should take us 4 years to reach that figure of 80,000 when we're able to buy the vehicle. So hers seems okay, but there's a question mark over here. She doesn't know what the total depreciation to date is. So our question asked us, look at the application procedure, think about the application procedure, and comment on the application procedure. What is going wrong here? What can we improve? What should this business be doing to control things better? So let's look at some of the answers. The first point that we mentioned was that there was a problem with the accountant being allowed to take out the car when in fact the policy clearly states it should only be the sales representative. Think about what happens at your school. At your school, I'm sure the grade 12 learners have got perhaps some special rights and privileges that maybe the grade 8 learners don't have. It's because you've reached that age in your school career. The same thing's going to happen here. The only person who is allowed to buy a vehicle is the sales representative. So that could be our first possible answer. So I'm just going to ask you to identify 3 possible points. The first one will be Andrew took out a car, or we should say took out a vehicle, but he is an accountant. Who's allowed to take out cars in the business? Only
sales. As I say it, a sales representative.
Only the sales representatives. So only sales representatives are allowed to. So this is a problem. And how can this business control this? Well, I think there's already a problem with this business's application procedure. Let's have a look back at this form. Look at this application. Actually, let's look at the one of Andrew. It just says employee Andrew Minnick. Nowhere does it say who Andrew Minnick is. There isn't space to say whether he's a sales rep or whether he's an accountant or what his job is. He could be anything in the business. So maybe they should redesign the form so that the form makes sure that it's only sales reps that are able to do it. Or maybe this should be checked by somebody who knows what Andrew Minnick's position in the business is. So I'm not going to write up those answers. You can think of maybe your own possible controls, but there is already a flaw in the procedure whereby we should perhaps redesign this form. There's something that's not quite right with it. The second problem is the fact that Andrew changed the depreciation rate on the day he bought the car. It looks to me as if he was trying to do this to advantage himself. If this car depreciates faster, then Andrew is going to be able to pay less for it, because remember, he is going to buy the car at the carrying value. So the faster the car depreciates, the faster it loses its value. He changed it from 20 to 25%, and it seems to me quite strange that he did this on the day that the car was going to be sold. Sorry, on the day that the car was bought. So we seem to have here something that we call in accounting or in business a conflict of interests. Have you heard of that before, Megan, a conflict of interests?
Indeed, I have. Lots of times.
Lots of times.
Yeah.
So an example of that would be when you've got somebody who...
Like, let's say my mom was a teacher, or no, let's say rather like if you're in an insurance company and you have a disciplinary hearing, and then I worked for her and I can't be a witness in a disciplinary procedure kind of thing.
Exactly right, because you can't witness in a disciplinary procedure because obviously you love your family, it's your mom, and you would probably say things that would try and get you off the hook instead of maybe telling the truth or something like that.
Yeah.
In the same way, sometimes it's not necessarily a good thing for, let's say your mother or your father is a teacher, it might not be a good thing for you to be in your mother's class. Sometimes it's unavoidable, sometimes things like that happen, but the problem is your mother wants you to pass, so there might be a conflict of interest. If you get good marks, some people might say, well, it's just because you're in the class. So think about other conflicts of interest. We're going to go for an ad break now, and we'll chat to you in a few seconds.
Okay, cool, Martin. I hope you guys have a fantastic ad break, and we will be right with you when you get back. Enjoy. Welcome back, Mindsetters. So I hope you had a fantastic ad break, and Martin is ready to answer all your questions. Okay, so let's get going with non-current assets.
Thank you very much, Megan. And during the break, we had a very nice answer to the question that I asked you earlier from Tabo, where I asked you to suggest two possible ways in which the business could implement measures to become more green. So he suggested two very good answers. He said, we must make sure that our car is only used for business matters. So we would want to make sure that the employee doesn't use the car to go and drive and visit friends, or to go on a holiday for themselves, or to go and fetch children from school. We should try and implement something to ensure that the car is only used for business matters. Nice answer, I like it. And the second possible thing that Tabo suggested is that we should buy some cars that don't use a lot of fuel. There's no need for a business to buy a very expensive car that is very heavy on fuel, that pollutes the environment, that you could get by and do all the needs that the business has by buying a smaller car, a car that is cost effective. In fact, you could even in the future get cars that don't use fuel at all, because you could get electric cars, or you could get maybe those hybrid cars that are part electric, part using fuel. And the other big benefit of buying a car that uses low fuel is that your business is not going to spend a lot of money on petrol. If you buy a very expensive car, you're going to use a lot of petrol during the month, a lot of fuel during the month, so there's no need to buy such an expensive car. So well done, Tabo, I like your answers. And there are many other possible answers to this question, so I'd like to encourage the learners, the mindsetters, to think a bit more about this and see what else you can come up with. Okay, I'm not going to discuss the third measure, because we can get to that. You can think of it on your own. We've discussed quite a few of the problems. We're going to get back to the second question, where it says, complete the asset disposal account. Now remember the asset disposal account, that's been around with us a very long time. We've had it since grade 11, and it's something that keeps on coming up in questions, so it's one that's important. It says, complete the asset disposal account for the sale of Natalie's car by the business. So we're going to deal with the third employee, Natalie, who is going to buy this car, and it says that we must clearly show the profit or the loss that is made on the sale. So we're going to do that in a moment, but let's just go back to our information to read and see exactly what's been given to us. So it's asked us to go to Natalie's application. One of our employees, Natalie Chevreau, Her application date was the 30th of June 2012. So that will be the day on which this car is being sold. We can see that the original purchase date of the vehicle was the 31st of April, so we know that this vehicle is 4 years old. We also know the original cost price of the vehicle is $140,000. Mindsetters, think back to what we discussed at the very beginning of this lesson. We discussed how to do the asset disposal account. And I said to you, step 1, put the cost price in the asset disposal account. Here we go. It's been given to us. There is the cost price of the vehicle. So what we need to do is we need to go to our asset disposal account over here, and we would have to remember our theory. We know that the cost price always appears on the debit side. We also know that we are selling a vehicle. So I'm going to write vehicles over here. Remember, when you are doing asset disposal, most of the entries happen in the general journal, except one which we'll discuss in a few minutes' time. And we also know that the cost price was, 140,000 Rand. Let's fill it in there, 140000. Dates are, of course, very important in your accounting. We need to just check when it happened. It was on the 30th of June 2012 that this was being sold. So I'm just going to fill that in here. So it was June the 30th, 2012. And we can just put the 2012 over there. You would probably have a little bit more space in an exam answer sheet. So I filled in the cost price of the vehicle. I've already done step 1. Think about what the second step is before I get there. I'm sure you know what the second step is. We need to put on the right-hand side the accumulated depreciation belonging to that vehicle on the date of the sale. But unfortunately, there's a problem here. There's a question mark. So what that might mean is that we're going to have to calculate depreciation, and that's why it's important to know your different methods. However, in this question, we're lucky because we've been given it. Let's read the further information over here. It says that Natalie was not sure how to work out the carrying value of the vehicle. You mindsetters know how to work out the carrying value. It is the cost price minus the accumulated depreciation. You told me so earlier on the page. You know your stuff. But Natalie doesn't know, so we're going to help her. What has happened is that she has offered an amount that she thinks is fair. So she has come up with her own amount that she thinks she should offer for this vehicle, and it's based on the trade-in value of the vehicle according to her husband, who runs a car dealership. So what Natalie has done, she's gone to her husband and she's said, how much would you expect to trade this car in for? And he's given her an answer. He's told her 57,500 Rand. That's the purchase price. She's allowed to say what she wants to pay for the car. She's prepared to pay 57,500 Rand. But it does tell us here that the accumulated depreciation on Natalie's vehicle was shown in the accounting records as 114,846. We've been a bit lucky here, mindsetters, because our question hasn't made us work out depreciation. It's given us the accumulated depreciation on the date of the sale. So before you start panicking and thinking, oh my goodness, I don't have the accumulated depreciation, how am I going to work it out? You know your methods, so if you've given the information, you would be able to work it out, but read the whole question. Sometimes the information is staring you in the face. This 114,846 is the accumulated depreciation, and we know that our second step is to transfer it into our asset disposal account. So we would go, again, June the 30th, 2012, let's just put that in. And now here we have to write that whole long sentence, accumulated depreciation on vehicles. You see that I'm having some trouble fitting it in. Obviously, it's easier to write on it if you have a pen, but please, 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 mindsetters, never, ever, ever abbreviate these terms. Always write out in full accumulated depreciation on vehicles, because that's what you're required to do. The other ledger account is called accumulated depreciation. You're not allowed to abbreviate. So what we do here, this entry is made in the general journal, and we know that our number was 114,846. Let me put it in here, 114,846. 114,846. So right now, we've got the cost price and we've got the accumulated depreciation. Both of that information has been put in here. Also, remember that in an exam, if you need to go out of the lines, you will sometimes be allowed to do that, like I've done here, but try to fit it in because it just looks neater, it just looks better. Okay, let's go back to the information that we've been given here. Here is our third step. She is offered to purchase this vehicle at its purchase price of $57,500. That is what she is offering to pay. So we know that when somebody is offering to buy a vehicle, we must record in our asset disposal account the selling price of the vehicle over on the credit side. Also, the details here are going to be very important. Natalie is going to pay cash for this business. So remember what I taught you at the very beginning of this lesson. When somebody pays cash for a vehicle, the details that you're going to write here are going to be bank. So let's just fill that in here. B-A-N-K is bank. And we need to, of course, put it in the correct journal. What journal are you going to use when you receive money in the bank? Very easy. You should know that it is the CRJ. So we'll fill CRJ in over there. What now happens is we stick in the purchase price. There it is, 57,500 Rand. So I'll fill it in here, 57500. Now I've filled in all of the three components of my asset disposal account. The last thing that I want to do with the asset disposal account is to work out whether I've made a profit or whether I've made a loss. The question asks us to calculate the profit or loss. So that's very easy because I'm sure you know how to do that. We're just going to balance and total our ledger account. We can see that on this side we have 140,000, and we can see on that side we've got 114 plus 57. That already looks as if it's going to be more than 160 because 114 plus 57 is at least 160. So we know that the right-hand side is going to be bigger, the credit side is bigger. Let's calculate the total on that side, 114,846. To that I'm going to add my selling price, which is 57,500. And what that means is that the total at the bottom will be 172,346. Can you remember that number for me, please, Megan?
172,346. Got it.
Okay, so what we need to do here is we just need to fill it in as the total. What was it? 172,346. Thank you very much. And we'll fill it in on this side as well, 172,346. The green number is the total, so what we can see is that our balancing figure is going to be here on the debit side. And you should know already that if it is on the debit side, we have actually made a profit on the sale of the asset. So I'm going to fill in here profit on sale of asset. If the debit side had been bigger and the balancing figure had been on this side, we would have unfortunately made a loss in this question. So we've made a profit on the sale of the asset. All we need to do now is calculate what that profit was. The way we do it is we just balance the debit side of the ledger account. So we will take the answer that I've already got here on my calculator, 172,346, that's the total, and I'm going to subtract the 140,000 to balance the ledger account out. You should all know how to do that, and you can see that this is a profit of 32,346 Rand. Let's just fill that in over here. 32,346, 32346. And that's a profit. I've indicated it there. And of course, it's going to be in the general journal. So that is our asset disposal account completed. You can see it was for quite a few marks. It was for 9 marks in total. And we've worked out that we've made a profit on the sale of the asset. I think that we've got time to do one more question.
Yeah, still got time.
So let's just go to the next question here. It now says, at what value would the business have sold the car to Natalie? Based on the business policy of selling vehicles at the carrying value. We know from the information that Natalie bought the car for 57,400 Rand. But the policy of the business is to sell them at the carrying value. So the question is actually asking, what was the carrying value that would have been shown in the company's accounting records? You all know the formula. You've given it to me before. The carrying value is equal to the cost price minus the accumulated depreciation. I'm just going to abbreviate it now to make sure that we are able to finish the question in time. So we need to look at the cost price of this vehicle that we have, and if we go back to the information, the cost price was this 140,000. So let's write it there, 140,000. And we also know what the accumulated depreciation was, because the question gave it to us. So let's look back and find it. It was the 114,846. So I'm going to subtract 114,846. If I put that into my calculator, I will get the carrying value of this vehicle. So it was 140,000 minus 114,846. Sorry, I've made a mistake there. 114,846. And the answer comes to 25,154. So the answer to that question is 25,154. So just to summarize, what would have happened here, you can see that she was supposed to pay only 25,154 for the business, but in fact, she paid the purchase price of 57,500. She actually paid much, much more than she was supposed to. So there's a problem.
Okay. Thank you, Martin. I think that's all we have for today. So I just want to quickly wrap. Thank you so much, Grade 12s. Thank you for tuning into today's show. You're here with me and Martin, Megan and Martin, M&M, and I hope you have a fantastic Thursday night. Enjoy.